All right, imagine pouring $1.2 billion into a machine, knowing exactly how every single input will translate into predictable, long-term growth. It's a massive capital plan, and it's currently fueling the next big phase of expansion for one of the most fascinating companies in the utility sector.
So let's get right into it. Welcome to our explainer on Unitil Corporation. They're a fully regulated, pure-play New England utility company. And honestly, what makes them so interesting to study is how transparently their business model converts infrastructure investments into steady, reliable returns. Today, we're unpacking Unitil's growth engine. We'll do a quick company snapshot, look at their massive Q1 2026 financial surge, check out their strategic acquisitions, map out that $1.2 billion plan, and wrap up with the investor value proposition. Okay, part 1, Unitil, a company snapshot. Let's look at who they are and how this low-risk model actually plays out. Looking at their footprint, Unitil is super targeted across New Hampshire, Maine, and Massachusetts. They're serving 110,100 electric customers, 105,000 natural gas customers, and roughly 10,700 on the water side. It's a concentrated regional presence that's really benefiting from strong local economic growth, plus a continuing price advantage for natural gas over other heating fuels up there in the Northeast. Here's the real kicker, though. They operate a 100% regulated utility business. For us, that is the key to understanding their financials. Because they're fully regulated, their distribution revenues are decoupled from actual sales volumes. Meaning, if we get a super mild week and people use less power, Util's base revenues are still totally protected. On top of that, they don't sweat commodity costs. If the wholesale price of gas randomly spikes, those costs just pass through. They don't absorb them. It creates this incredibly low-risk setup. Moving on to Section 2, the Q1 2026 financial surge. This highly stable model just kicked off some serious short-term momentum. Just look at this jump. It's a massive 27% year-over-year spike in first quarter revenue. We are talking a leap from $170.8 million in Q1 of 2025 straight up to $216.9 million in Q1 of 2026. For a utility company, a top-line jump like that is absolutely wild. And yeah, that top-line magic flowed right down to the bottom line. Net income surged nearly 21% to $33.2 million, and diluted EPS climbed 9.5% to $1.85. So what was the secret sauce? Well, it was heavily driven by a huge 36.9% jump in gas revenues. That came from a great combo of adding new customers, dealing with a colder winter, and just perfectly executing on their approved rate cases. Section 3, strategic utility acquisitions. Because organic growth isn't the whole story behind that huge Q1. Unitil has been super aggressive in a smart way with M&A. In January 2025, they brought in Bangor Natural Gas, followed by Maine Natural Gas in October. Together, that snagged them about 6,400 new customers. And now, looking at 2026, they've got this pending $57 million deal for Aqueon Water's New Hampshire operations. This is a fascinating move, right? It brings in 11,000 water customers, giving them a whole new utility vertical, while perfectly keeping that 100% regulated, low-risk vibe intact. When you break down the subsidiaries here, you've got Unitil Energy Systems, Fitchburg Electric, and Northern Utilities managing their own rate bases. Roll all those efficient local operations up to the corporate level, and Unitil Corporation is pulling a highly respectable 9.6% return on average common equity over the last 12 months. Basically, they know exactly how to integrate these assets and run them at a profit. Okay, Section 4, the $1.2 billion growth engine. The big question now is, how do they keep this train rolling into the 2030s? Well, the answer is hard physical infrastructure. They are pouring serious cash back into grid modernization, climate resiliency, and system enhancements. And to be clear, this isn't just patching up old pipes. It's a massive, strategic upgrade of their capabilities to meet modern climate policies and support regional energy needs. This right here is the mechanical heart of their strategy in action. Step 1, drop $1.2 billion into capital expenditures over 5 years. Step 2, since they're fully regulated, this investment legally grows their permitted rate base by an estimated 6.5 to 8.5% annually. Step 3, that larger rate base allows them to earn a higher return, driving a predictable 5 to 7% annual EPS growth. It's literally a straight pipeline from cash invested directly to earnings generated. But to fund a massive $1.2 billion plan, you need a bulletproof balance sheet. So let's look at their FFO to debt ratio. That's funds from operations to debt, which basically measures how easily operating cash flow covers what they owe. S&P gets nervous and might downgrade you around the 13% mark. Unitil, they're sitting incredibly comfortably at 16.3%. That financial discipline is exactly what locks in their BB plus investment grade rating, so they can access the capital they need without a hitch. Finally, Section 5, the investor value proposition. Let's bring it all home and talk about why this actually matters for you. This is where operational stability becomes actual returns. For the focused investor, Unitil targets a 55 to 65% dividend payout ratio, which implies roughly a 3% yield right off the bat. When you add that steady yield to their 5 to 7% EPS growth from the rate base expansion, the map points straight to a highly stable, competitive 8 to 10% annual total shareholder return. And hey, this isn't just some pie-in-the-sky projection, they actually do it. In their most recent fiscal year, they posted a record-adjusted EPS of $3.16. They are hitting their historical growth targets right on the head, proving that this disciplined, regulated strategy absolutely works in the real world. So as we wrap things up with a continuous history of dividends, revenues that literally don't flinch at volatile sales, and a fully funded $1.2 billion growth pipeline on the horizon, you've got to ask yourself, in a market full of unpredictable variables, is a reliable, steady engine like Unitil exactly what your long-term portfolio strategy is missing?